Hi there, welcome to GrainTV. It's Monday, March 7th. We had a up day in grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn was up 3/4 cent, beans was up 3 1/4, and wheat up 2. These are actually well below where we traded at the high end of today. We were up as much as 7 on wheat, up as much as 4 on corn, and almost up to 10 cents higher. 8 cents higher on beans before closing down sharply at the end of the last bit of trading. There was little news to talk about this morning, but we did see some short covering that continues to drive this market higher. Probably some of the news that is helping liquidate some of these large short positions. First of all, we've got the plains that continue to be dry over the weekend. The temperatures from North Dakota all the way down into Texas were in the mid-70s, and with no precipitation noted over the weekend in those central plains states, that got the market at least thinking about the possibility of some problems in the winter wheat belt. The other thing that has been sparking some short covering is the changes in the Brazilian currency, the real, which has been up 6% over the last 3 days, although today it backed off a little bit. News out of Brazil is looking at a political situation where the current government or current administration may be under scrutiny for some political wrongdoings, and so traders there are looking for a potential shift in the political regime that may improve the economy of Brazil, and therefore the stock market and the real have been on sort of an upward trajectory, which makes Brazilian soybeans much more expensive than they were just last week. Let's take a look at USDA's export inspections this morning. We got good news in the case of corn and wheat, both of those numbers coming in just above analyst expectations, with corn coming in at 953,000 metric tons of exports for the week versus expectations of 615 to 825,000 metric tons. Wheat coming in at 443,000 metric tons versus expectations of 300 to 435, and beans coming in at the high end just above 1 million metric tons. Let's take a look at the situation between the U.S. and Brazil when it comes to the competitiveness of bean pricing in the world market. And so what we've got on this chart is the Brazil price in purple and the U.S. price in orange. And what I want to focus on is pretty much the period after November and all the way up into January, where the U.S. price is trading at a fairly substantial premium to the Brazilian price, around $10 a metric ton, sometimes as high as $12 to $13 a metric ton, but that's where it's been for much of our export season. However, with the change in the currency, the Brazilian real improving by 6%, that has substantially changed the competitiveness of U.S. beans. Now, our price is only about $5 a metric ton above the Brazilian price. Whether that will persist is difficult to say, but at least for the short term, that gives us at least some competitive advantage in the world market at a time when Brazil should be exporting beans. Now, for those of you that are watching the bean market, we have daily technical alerts that come out before each trading session that guide you into where we think the market's going to go based on technical indicators. And so Sunday night we put out an alert on front delivery May soybeans, calling for a move from 878's close on Friday to 881. On Sunday night, we got that confirmation. Monday morning, even with the market up at 882, we were calling for a trading target of 886.5. We got that as well. So if you are a farmer or if you're a trader and you're looking to get some guidance on where the markets are going, our technical alerts coming out every morning by email are a very valuable tool to help you in your trading decisions. If you have any questions, visit us online at grainhedge.com to get a free trial of our technical alerts and our trading platform, or as always, give us a call, 877-472-4607. Tomorrow we'll be talking about the expectations going into Wednesday's USDA crop report. GrainHedge is pleased to announce a new tool called Technical Alerts. Technical Alerts is free to our trading clients and delivered by email first thing in the morning every trading day. Technical Alerts is a powerful, easy-to-use system that provides quality trading opportunities. Each trading opportunity shows a chart and analysis, providing clear price targets and risk potential to allow you to make an educated trading decision. The commodities covered include grains, livestock, crude oil, currencies, bonds, and metals. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. Let's take a look at how to interpret a technical alert. At the top, you will see a red or green indicator arrow which signifies the market's likely move. Red shows when weaker prices are expected, and green for when higher prices are expected. The summary section shows the expected price target and the expected duration it should take to reach the target. Also, Technical Alerts provides both support and resistance to help you identify key levels on the price chart. Underlying support is where technicians believe there is a level of buying interest, while overhead resistance is the price level thought to trigger more active selling. The support is marked with the letter A on the corresponding price chart, and resistance is marked with the letter B. Below the chart, you will see the data interval of the bars. For example, a 1-hour data interval means the chart pattern was constructed from a 1-hour bar chart. And when you are using the GrainHedge trading platform, you can use the pull down on your chart to change the bar interval to the appropriate time period. As always, we strive to provide you the best tools to improve your trading and hedging activity. If you have any questions on how to use Technical Alerts, please contact us at 877-472-4607 or by email at support@grainhedge.com.